Good evening and welcome to another edition of the investingh webinar series. I'm your host, Prince Henry Dankwa. This webinar is brought to you by investingh. For those of you who are visiting us for the first time, investingh is the leading provider of financial news and education in Ghana. Over the years, our news, magazines, and more recently our webinars have been delivered to thousands of people in Ghana and beyond. And we are glad to have you here, spend this time with us for us to educate ourselves today. Today's webinar is proudly sponsored by SIC Financial Services Limited. SIC FSL is the leading investment management and advisory services company, licensed by the SEC and the NPRA. You can visit their website, www.sic-fsl.com, for more information. We'll be talking about them later on today, so you get to know more about them. We've had webinars that have covered topics on investment in mutual funds, stocks, cryptocurrencies, and real estate. All our previous webinars are available for streaming on our YouTube channel, investingh. So for those of you who are yet to subscribe, kindly do subscribe to our YouTube channel, investingh, and watch our previous webinars. Please do well to like our videos when you watch them and recommend them to your friends as well, so that they all get to learn what you are also learning. Today's webinar will also be streaming live on our YouTube channel, investingh. So if you're unable to join here, or you know someone who is unable to join via the Zoom link that was made available, please send the YouTube live link to the person. The YouTube live link will be made available in the chat section here very soon, so that you can send it to anyone at all, so that they can join us. Okay. If you also have any questions during the course of today's webinar, please do well to direct your questions through the chat section here on Zoom, or under the comment section if you are streaming live on YouTube, and we'll respond to them during the Q&A session. Today, we'll discuss a webinar on retirement planning titled Funding the Future. And to take us through this discussion, we have two experienced speakers in the persons of Susanna Somuah and Benjamin Nathan Otchere. Our two speakers will take us through this discussion today and respond to all our questions and educate us on how to fund our future. Let me give you a brief introduction of who these speakers are. Our first speaker, Susanna, is an experienced investment professional whose career spans over a decade in the stock brokerage and investment banking industry. She's currently acting as the head of asset management department of SIC Financial Services Limited. Prior to assuming this role, she served as treasurer and investment officer at the same SIC FSL, where she managed wealth management clients, provident and pension funds. She also worked at IC Securities and UMB Stockbrokers Limited, where she was part of the team that handled the GOIL IPO and also the rights issue of Republic Bank. Susanna holds a master's degree in project management from JIMPA, a diploma in business administration from the same institution, and she is a licensed investment representative by the SEC of Ghana. She's currently a student of the Chartered Institute of Securities Industry, UK. So that's about Susanna. Our second speaker, Benjamin Otchere, is a thought leader in finance and investments. He's also a preacher and author with 5 years of experience in the financial services industry. Benjamin is currently a portfolio analyst at SIC Financial Services Limited. Prior to joining SIC Financial Services, he worked as a relationship manager at DataBank Financial Services Limited. Benjamin holds a Bachelor of Arts degree in Economics and Sociology from the University of Cape Coast, and he's also an SEC licensed investment advisor. Ben is currently studying at the Corporate Finance Institute to become a certified financial modeling and valuation analyst. So, ladies and gentlemen, thank you very much for joining us. These are our speakers for the day. Benjamin, can you hear me? I think we lost Benjamin. Susanna, can you hear me? Okay, Susanna is connecting. I'm yet to see Benjamin. Susanna, can you hear me? Okay, so whilst we wait on our speakers to connect.
Yes,
hi, Susanna.
I'm signed in as HP, so you'll have to allow me.
Oh, okay.
I'm using my phone as well. So let me use
okay, so you'd have to disconnect one because we are getting a bit of feedback.
Okay, so sign in on the HP.
Okay, sure. All right. I think I've done that. Benjamin, okay, Benjamin is back. Benjamin, can you hear me? Okay, great. So I'm making available the YouTube live link and also the Zoom links in the chat section for those of you who are unable to join us. Please send it to your colleagues, your friends, share it on your WhatsApp status, and let's get more people to join us here. Please do what to like and subscribe if you are streaming on our YouTube channel. All right. Okay. Benjamin, can you hear me? Susanna, you can hear me, right?
Yes, I can.
Okay. So you can begin with us whilst Benjamin sorts himself out.
Okay. Thank you very much, Prince. Good evening to everyone. It's a delight to join you this evening, wherever you are. And we are grateful to Invest in GH for giving us this opportunity to come your way to talk to you about investing for your future. So today our short presentation would be on funding the future. Let me quickly share my screen so that we can quickly go through the slides. Okay. One second. Okay, great. So once again, good evening. We are here this evening to talk to you about funding the future. We are. I'm going to be doing this with my colleague Benjamin Otchere. So the presentation will cover the profile of SIC FSL, who SIC FSL is, what we do at SIC FSL. We'll walk you through all you need to know before retirement. And then we'll tell you about the new dispensation and then why we want you to start investing for your future, to have a plan B, so that when you go on retirement, you have something to fall on. Like I know everybody knows this saying that goes that you make hay while the sun shines. So this evening we are here to encourage everybody and to educate all of us that as we are working and we are full of life, we put some funds by so that when we are weak and old, we can have some funds to fall on and will not be a burden onto our family. So I'll quickly walk you through the profile of SIC Financial Services. So SIC Financial Services is an investment banking firm. We've been around for over a decade. We first commenced business 1st June 2015, and we have been licensed by the Securities and Exchange Commission as an investment advisor and a broker dealer. And we're also a member of the Ghana Stock Exchange. SIC FSL has a robust staff members who are very well versed in the investment industry and who have very good experience in the industry as well. So SIC FSL has two shareholders, and then the two shareholders of SIC FSL are the giant SIC Insurance Company, and then SIC Life. So SIC Insurance Company owns 70% shareholding of SIC Financial Services, and then SIC Life owns 30% share. So you can be rest assured that financially we are also backed by these two giant insurance companies. When you come to SIC FSL, what do we do? In SIC FSL, it's a one-stop shop for all your investment needs. So at SIC FSL, we have a fund management department that deals with managing of funds for individuals and corporate institutions. We manage pension funds tier 2 and 3. We manage provident funds for companies as well. And then any individual will help you to plan your retirement and do financial planning as well. SIC FSL also has a corporate finance and advisory department who help companies to raise funds on the stock exchange and also raise funds through mergers and then raise funds through bond issuers and then do some commercial papers for private companies as well. SIC FSL has an investment brokerage subsidiary. That's the SIC Brokerage Limited. At SIC Brokerage Limited, what we do there is to buy and sell shares for you on the Ghana Stock Exchange. We also sponsor companies to raise IPOs on the exchange as well. We buy bonds and fixed income for our clients as well. And all the things that SIC FSL does is backed by a robust research team. So we have a research department that does investment into all the investments that we do. So before we venture into any investment vehicle, we are sure that there's robust research that has gone into it. We are sure of what we are doing before we venture into it. So I'll quickly talk you through the pension scheme, the new pension scheme, which is mandatory retirement scheme for everyone in Ghana. It's compulsory. Once you are a worker in Ghana, you are expected to be doing this. Before it was the SNET, now MPRA has come up with new rules. So the new pension scheme, as stipulated in the Act 2008, Act 766, and every worker is expected to contribute 5.5% from their basic salary. Is matched by the employer. Employer matches with 13.5% from the worker's basic salary. All come together. Sorry, the employer matches with 13%. All comes together to a total of 18.5%. And then this 18.5%, 13.5 goes into SNET. SNET manages it, and then at the end of your working period, this funds SNET multiplies by a factor, and then every month some amount is paid to you until God calls you home. And then the 5.5% is given to private fund managers to manage, which goes into the tier 2. So the mandatory retirement scheme distribution, actually 2.5 of the 13.5% that your employer contributes actually goes into NHIA, National Health Insurance Authority. And then SNET only takes 11%, which SNET manages for you. And then when you go on retirement, is given to you on a monthly basis. And the remaining 5%, like I said, go into private fund management like as SIC FSL and then trustees for them to manage for you. So at this point, we want to advise that this is the mandatory one. We are advising that this is not the only one that you have to do. In order to gain financial independence when you are on retirement, you have to think of a plan B. You have to also put money by whilst you are working so that when you come on retirement, you have enough funds to cushion you around. So at this juncture, my colleague Benjamin will come in to give us why we are saying that you should have a plan B when you go on retirement, and then benefits there is, and then how the whole scheme is about, and why we think that it's good that as a working class, we start now. Because looking at the data we're giving for participants for this webinar, we see the majority of us are within the ages which is less than 40, which means we have more than 25 years before retirement. So the time is now. It's good that we start now putting funds available and doing a plan B for retirement, so we don't become a benefit and we don't become a burden on our families, and then we still enjoy life whilst we are at home on retirement. So Benjamin, if you are on the line, over to you. Hello, Ben.
Hello, Susan.
Hi.
Okay, thank you so much. I'm on.
Okay.
Unfortunately, my video is not coming, but friends and co are working for it to come up. So thank you so much, and we are grateful that our audience are in, and thank you, Susan, for the preliminaries. So we are going to continue, and as Susan said, there's a need for us to have a plan B. There's a need for us to have a plan B. And as a matter of fact, if you are somebody who is in the bracket of 40 to about, let me say below 40 to 55, there's a need for you to have a plan B. And so I'm going to take us through some things that we actually have to notice, or the things that will actually give us that head start to have that plan B that we are talking about. So Susan has explained all the mandatory retirement scheme. I mean, the structure, and then the contribution aspect, and then the distribution aspect. Now, let's look at some facts about the scheme. Now, this is a scheme that was enacted some years back, and then we have seen it in operation, and it's being administered by the Social Security National Insurance Trust. When you look at January, as of 2021, the trust is saying that we have about 1.6 active members. 1.6 active members. This means that there are about 1.6 million workers who are contributing to the fund. And then when you look on your right side on the screen, you realize that there are about 226,000 pensioners. So it means that upon all the investment that the trust is doing and the contributions that come in a month, that is what is funding those who are on retirement now. But here is a wake-up call that our labor force is around 12.9 million. And a labor force that is around 12.9 million against a membership of 1.6 million, it means that we are falling short of about 88 point something percent. You see, so my warning here to all of us is that the trust is doing very well. At least half a loaf is better than none. But we should also be aware and see that if the trust does not up its game and close the gap of 88 point something percent, then it means that the scheme is very shaky in the next 20 years to come, of which maybe you and I may be on our way to retirement. Now, if you look at the contributors to labor force ratio, it's just about 12.4%, which is not half of which is not even half of the labor force. So it means that the trust will have to do a lot of work to bring more of the labor force into the membership circle, so that there will be more funds to do a lot of investment, so that it can also fund the pensioners. Now, if we go to the next slide, the next slide actually is talking. Susan, if you are there, please move to the next slide for me.
Okay.
Now, the next slide is talking about the outcome of the scheme that we have all spoken about, the outcome of the scheme. And you realize that the highest pension pay goes to, about 121,000. The highest pension pay is about 121,000 plus. Now, the average is around 900 cedis, and then the minimum is about 334 Ghana cedis. Now, my question is that, where do you fall? My question is, where do you fall? Do you fall under the 129,000, or you fall under the 900, or you fall under the minimum payout, which is 334? And as the pyramid shows, you realize that a lot of us will not fall in the upper circle, which is the 129,000 payout. A lot of us will be within the average and then the minimum pension. So this calls for a redress to our in our retirement situation. So if you are somebody who is watching this, and then you realize that if you are taking home about 2,000 and more, or if you are taking home about 1,500 or even more, you realize that at retirement, if this should hold, it means that you are getting 900 cedis on the average. And 900 cedis, I'm sure, will not satisfy your needs. So there is a need for us now to sit up and then we plan our retirement. If you have not thought about it, this is the time for you to think about it. Somebody may ask that, when is the time to start? And I will say that the time to start a retirement plan or to start planning your pension is now. So now let's move to the next one. Our next one talks about some facts that we all must know. Some facts we all must know when it comes to retirement. Now, what you see there on your screen is a study that was undertaken by an institution called Genworth, and they are trying to tell us some realities on the ground. Now, when you look at your left, with the arrow going down, the yellow arrow going down, it says that according to the study, which was conducted in 2012, those who are still working expect that their expenses at retirement reduces by 52%. So actually, they think that so far as I'm not picking a car to the workplace, so far as I'm not eating at the workplace, so far as I'm not doing certain things that I might do when I was working in retirement, it means my expenses should go down. But here is the reality. The arrow going up, the red or wine arrow going up, shows the reality. About 65% of retirees saw their expenses go up. So it shows a picture where you have to be so much concerned about the costs that involve in retirement. The costs that involve in retirement. But don't worry, we are going to take you through a few slides, and now you will come to a page where you are now comfortable in talking about your retirement and planning it thereof. Now, when you go to the second slide, that second slide is also a fact finding, and it talks about some needs, about 4 top needs of retirees when it comes to retirement or pension. You realize that there are 4 top ones, and number 1 is food, number 2 is clothing, number 3 is housing, and number 4 is healthcare. This is a study that was conducted by Akosua Nelson Kofi. She was an investment analyst with the SNET, and she brought out this study. And so you realize that these needs are are the needs that are very important to the survival of a retiree. And she's saying that these needs are the needs that were not sufficient for retirees. So 76% of retirees said that their food was not sufficient. They didn't have sufficient food during retirement. 43% said that they didn't have housing. 30% said they didn't have enough health care, and 47% didn't have enough clothing. But we ask ourselves, why is it that we work over 25, 30 years and more, and then we go home having to enjoy our rest from work or having to enjoy the family and our grandchildren? We intend to have not enough of these things. This is something we have to relook at and then try and plan again. And so therefore we say again that that is why you need a second plan. Now, when you go to the second, the next slide, it is telling us about the situation of some retirees. It is saying that there are some children that will help their parents when it comes to retirement, and there are others that will not help at all. So this stat tells you that 53% of males help their parents in retirement. 53% of males help their parents in retirement. So this means practically that if you have 2 sons or if you have 4 sons, if you're on retirement, you are likely to get just 2 taking care of you, especially to those of us who have made our children our retirement package. Now, on the right side, which shows that 47% of females do help their parents. It means that if you have 2 or if you have 4 daughters, you are likely to have just 1 to 2 of them helping you. In fact, if you have all the 4 helping you, more is better. Is that not it? But here is the case that the stat is showing that 47%, which means that just 1 or less is going to help you on retirement. Now, the next slide also talks about something very, very interesting. It talks about the dependence of retirees. The dependence of retirees. And these dependents are our children. So if we go on retirement, we are likely to have, for the male side or for the men, we are likely to have about 69% dependence. In all our family, our children, our friends, and all that, we have about 69% of them dependent on us for survival. And for the women or the female side, we have 45% dependent on us. Definitely, the women are not having problem here and on this context. But we, the men, because we are the breadwinners and then we are the leaders in the house, much more people are going to look up to us when it comes to retirement. So there is a need for especially the males to rise up and then make their retirement planning a priority. First thing on the sheet, so that we can have a very comfortable retirement and help others. And one interesting thing I got to realize, speaking with clients and pensioners or people who are about to go on pension, you realize that most of their children have not had a good job yet, or they don't work at all. So they have to be in the position to help their children, or they will have to help their children. so that they can get to a point in life where they can also come back and support their parents little by little. So far as our culture is concerned, that is how Ghanaians and then Africa to say is. Now we move to a next slide, which tells us about the benefits of having a plan B or the benefits of retirement planning. Number one is peace of mind. Peace of mind in the sense that if you know that by the end of your 30 years, 35 years of working, you have something to fall on. That is the peace of mind we are talking about. You know that at the end of retirement, you have something to, rely on. And that is the peace of mind we are talking about. So planning your retirement will give you peace of mind. Number two, it is going to give you some tax benefits. If you are somebody who is contributing to your tier 2, or if you are a worker who is also contributing to a provident fund, you are likely to have a tax benefit. The tax benefit here we are talking about is your taxes are going to be reduced as compared to somebody who is not paying or who is not contributing to any pension fund at all. So you have the opportunity to have some funds going into your retirement without any tax touching it, and then you are going to even earn more on that fund, and then in the future you get to enjoy. The third part is a posterity inheritance. At least if you are no more and you are contributing to some of these retirement plans we are talking about, or retirement schemes, you are likely to have these funds given to your children as an inheritance. And everybody is going to love it if they are gone, but their wards or their family is still moving like you are there. The fourth one is less contribution. Less contribution means that your contribution to a retirement fund is less, especially when you start early. So at this point in time, if you are able to start your retirement very early, let's say you have about 25, 20 years or 30 years to retirement, as compared to somebody who has about 7 years, 5 years to retirement. The two of you, the person who has more years will contribute less, but the person who is very close to retirement will contribute more. The fifth one is the chance to become a millionaire. I believe every one of us here would wish, or it may be your prayer or your dream, that you want to be a millionaire. And as a matter of fact, the reality is that everybody can be a millionaire at retirement. There's no two ways about it. We can guide you through that. The last point is that you get informed about the costs in retirement. You get informed about the cost in retirement. Now, these are some of the things that the next slide shows, some of the things that we also think that will help you to actually pay attention to your retirement planning. Number one is most Ghanaians earn small basic salary. A lot of Ghanaians or a lot of workers in Ghana have their basic salary to be small and their allowances very huge. And these retirement benefits we are talking about, or plans we are talking about, the deductions come from your basic salary. And so your allowances are not deducted. And so it makes your retirement and payout at the end of your working days very small. And that is why you need your personal retirement plan, so that you can contribute any amount towards a certain target. Number two, most companies do not pay tax, do not pay SNET. Just like we saw in the stats above, we have about 12 million labor force against 1.6 million contributors of SNET, which means a lot of companies in the system are not paying their workers SNET. Maybe you want to check and see whether your worker or your employer is paying. The third one is the rate of SNET contributors are declining. The rate of SNET contributors are declining. There's a growth rate of under 1% of contributors against an increasing rate of 10% of pensioners. Just under 1% are contributing to the trust. But the pensioners that are coming out are increasing about 10% and more. And that is why I always say that in the next 25, 30 years, that if things are like this, the trust may not be so much reliable. And so you need a plan B. The next one is inadequate retirement scheme by the state pension scheme. Just like I explained earlier, your expenses will also increase. And because we have lack of elderly homes too, you will still need to cater for a high service when it comes to your old age, especially if you are sick, if you can't go anywhere, you need a home nurse and all that. Because we don't have elderly homes in Ghana, you have to pay more. And that is why you need a retirement plan B. And then the last point is that you can do better with same contribution you contribute to SNIT when you invest in a retirement investment oriented fund. When we go to the next slide, I'm going to show you why I'm retreating on the last point. Now the next slide. Yes, so that the last point I was talking about, that you can do better when you contribute the same amount of money to your own retirement plan or fund. This is a hypothetical case of somebody who earns a basic salary of 1,000. Now, 5% of this basic salary actually goes into tier 2, which is a mandatory retirement. And so this 5% same is contributed to a personal retirement account of this very person we are talking about. Now, if you look at the picture there, you realize that this 5% out of the 1,000 is just 50 Ghana cedis. 50 Ghana cedis. And this 50 Ghana cedis is invested every month. You contribute every month 50 Ghana cedis for 30 years. Let's say the person is just 30 years old now, and he's contributing for the next 30 years to 60 years. You realize that this person is going to have over 284,000 Ghana cedis sitting in his or her account, ready to be invested in another way. Now, my point here is that if, let's say, this person invests this 284,000 into a private, let me say, a fixed income instrument. When we talk about a fixed income instrument, we're talking about the treasury bills and notes, we are talking about the bonds and all those money market instruments. Now, if you are able to put such a thing, let's say in a treasury bill that yields about 15% per annum, that is per year, this person is going to get about 42,000 a year as an income. And this principal of 284,000 still sits as his own money. So a cash flow of 42,000 in a year divided by 12, this person is earning about 3,500 every month. So you are in retirement and you are earning 3,500 cedis every month. At least you are good, you are on the good side of retirement as compared to an average of 900 Ghana cedis. And mind you, if you are able to do this, what you have contributed in the mandatory one comes to support you in this very personal retirement fund. And so the question is, are you going to start now, or you are going to give yourself excuses? Now, we are going to give you some few steps in helping you to plan your retirement very well. These are wonderful practical steps that can help you to plan your retirement. Number one, you need to determine your retirement goals. What is your retirement goal? And your retirement goal is how much you need to survive in retirement. Maybe somebody will say, the amount I need to retire or to be comfortable in retirement is 10 million Ghana cedis. Somebody may say it is 500,000 Ghana cedis, and some may say it is 100,000 Ghana cedis. Whatever amount or figure it is, you need to set it. Write it down and just look at it. Let's move to the next step and see how best we can achieve this. Number 2, determine the age you want to retire. At what age do you want to retire? Maybe you are 25, maybe you are 23, maybe you are 30 or more. At what age do you want to retire? If you're able to determine that age, that is what is going to help us as investment advisors or financial advisors to sit you down and do the calculations to help you to know that, okay, with this age that you want to retire, you have about so and so years to retire. And therefore, this is the amount of money you have to contribute to hit your retirement goal. The third one, or the third step, is to decide what age you want to retire. Decide at what age. No, sorry, it's supposed to be decide how long you are going to live. Because even at the trust, they are able to assume the number of years people are going to stay after retirement so that they can be paying them thereof. Now, the fourth step is to visit a licensed investment and pension regulated institution for help. You need to visit a licensed institution. It should be licensed by the NPRA, the National Pensions and Regulatory Authority, and probably the Securities and Exchange Commission. You need to visit one of these institutions, of which SIC Financial Service is one. You can visit us. We'll put our contact in there. You can call us and we'll sit you down and then we'll do something wonderful for you. And then you need to also ask the advisor to help you to create an emergency fund. I always say that for you to plan a successful retirement, you need to have an emergency fund that can cater for your emergencies in case there's an emergency, so that you don't go into your retirement fund and spoil the whole plan. If you have an emergency amount sitting somewhere and you are contributing to your retirement, if there is a breakdown in your car or your engine is spoiled, somebody passes on, a relative passes on, you need to support, and any other thing you can think of as an emergency, you go into that emergency account and then use it to sort those problems. Now, the next step is that the institution is going to help you to determine the amount you need to contribute to achieve your retirement goal. It is our job and it is our work to help you to determine that. And we are excited and we are glad that you also open up and then let us help you to determine that amount. The last point is that you need to commit to a long-term and consistent investment mindset. You can never achieve all these things we are talking about, or you can never achieve the 284,000 target or 1 million target without you being consistent and having a long-term mindset. And of course, with the help of a financial advisor like SIC Financial Service. And so therefore, I'm going to bring our presentation to a close, and we are going to receive questions, comments, and any other thing. So thank you very much for joining. Prince, over to you.
Thank you very much, Benjamin and Susanna, for the wonderful presentation. I think we've had webinars that have discussed pensions in the past, but this brings a new twist to it. A few statistics that we didn't know before, but now we do, thanks to your team, and we are grateful. And viewers, before we start the Q&A session, I would like to say that this webinar will be streaming live on our YouTube channel, investingh. So if you know anyone who is unable to join us here, kindly send the YouTube live link, which has been made available in the chat session, to the person so that they can all join us. Also, please do well to direct your questions through the chat section here if you're with us on Zoom, or type it under the comment section if you are streaming on YouTube. Also do well to like and subscribe to our YouTube channel, investingh. If you're enjoying this webinar, please do well to like it so that it will be shared to other people to watch as well. All right, Benjamin and Susanna, I don't know how you'll be taking the questions today, but we have a few. So should I choose at random, or who is responding?
Yeah, I think you can choose at random. Maybe
Random.
if I have the answer, I'll give it. Susan has, I'm sure she'll come in.
Okay, all right, great. So the first one is coming from Eric Dawn. He's asking, can I purchase a 14 days T-bill at SIC Financial Services Limited?
Yes. Yes, you can. So our brokerage department can do that for you.
Okay, great. So there's a brokerage department at the SIC Financial Services,
Yes.
or is it a separate institution?
It's our subsidiary, SIC Brokerage Limited.
Okay, great. All right. Emmanuel is also asking, is there an age limit to start investing in pensions in SIC?
No. Once you are of the working class, so 18 years and above, because below 18 per the Ghana law, then you have to be a beneficiary. An elder person will have to invest for you. So it becomes in trust for an ITF account. So if you are 18 per Ghana laws, you are of age, and you are able to invest. So 18 years and above. But some parents even do it for their awards when they are below 18. So when they turn 18, they just transfer everything into their account. So like basically there is no really a time. When you invest early, it's better. The earlier you invest, like we said in our slide, it's less expensive, and then you have a longer period to invest, and then you get more, and then you get to enjoy more.
Oh, okay, sure. Questions are pouring in now. Frank is asking, how much do I need to retire? How much money or how much investments do I need before I can comfortably retire?
Okay, let me take it. Well, it's a good question, but it's going to depend on certain factors that is very relative or subject to every individual. We are all not the same. We don't have the same earnings or salaries coming in our accounts or pockets. We don't have the same expenditure pattern and all that. So we'll need to have some personal conversations so that we'll be able to help you. But I mean, it can be a guesswork. It can be a guesswork looking at your budget, personal budget, and then your expenditure pattern, so that we can help you to fine tune that guesswork. So that is what I can say.
Oh,
okay. Susanna, do you want to add to that?
Yes, like Ben rightly said, it's an individual affair, because your needs might be different from my needs. How much I expect to earn after retirement might be different from yours. So it's a one-on-one decision that you have to make. So we sit you down and we plan and we get to know what really is that's like you need. So it will be determined by the person. So individual and then their preference.
Okay, great. Akosia is asking, what can I do if I'm saving but my income is not enough?
Okay, so Akosia, right? Thank you for your question. Thank you for your question. And this is a reality. Is of course your income is not enough, and then you need to do something. My advice I give to our clients is that you need to look at a second income, or let me say a second source of income. But again, before you look for the second source of income, which is going to be an inflow, you have to also look at your budget, or let me say your money situation. Okay, we need to identify some potholes here and there so that we can patch them. After, then we'll be able to bring in another source. So two solutions here. Think of another source, and then also relook at your expenditure pattern, or we look at how you spend your money at the end of every month. If you're able to do that, you should have some money to spare for retirement.
Okay, thank you very much, Benjamin, for the response. Okay, this one, I couldn't get the name, but he's asking, do you have an investment package or a mutual fund tailored for retirement? Hi, Benjamin, can you hear me?
Yeah, Prince, I can hear. Please, the question again.
Okay, so the question says, do you have an investment package or a mutual fund that is tailored towards in retirement?
Okay, at the moment, we are about to roll out one, but for the meantime, what we do is that our private wealth management desk is ready to help anybody who is also ready to invest towards your retirement. We can have a special portfolio for you to start investing little by little so that you can plan towards your retirement. So that is what I can say. I don't know if Susan would like to add something to that.
Yeah, that's fine.
Okay, great. Thank you very much. The next question, well, the questions are so many. Okay, so someone is Ifua is asking, can we open an investment account from outside the country? I'm interested in buying some shares of some companies. Are there residential requirements for holding and operating an account in Ghana? That's from Ifua.
Yes, you can invest while you are outside. Indeed, we have some clients abroad who are investing with us. So you need to go through the KYC processes. Our compliance department will have to go through to see if there are no any risky issues related to it. And then once everything is fine, we go ahead and invest for you.
Okay, great. Thank you very much. Before we continue with the next set of questions, I'd like to say that the presentation and also the contact details of the speakers and SIC Financial Services Limited will be made available to all of you who are present here and those who have subscribed to invest in GH. So please, if you haven't done that, if you haven't registered with investingh, kindly visit our website on www.investinggh.info and then click on register. There's a short form for you to complete, just your name and then an email address we can reach you on, and then register with us so that whenever we send out mail correspondence or reminders for our webinars, you would also receive some. On our websites, when you scroll down, you are likely to see some WhatsApp icons there. There are links to our various WhatsApp groups. Please do well to join any of our WhatsApp groups so that you can receive our daily business and financial news. We also send out newsletters like the Business and Financial Times. We also send out magazines and also links to our webinars. So try and join any of our groups and then interact with us. Thank you very much. So let's continue. This is from Simon. He's asking, in case I want to retire at say 40 or 45 years old, am I able to plan it now or do I have to wait till I'm 60? That's from Simon.
Thank you very much, Simon.
Would you want to take it? Yeah, okay, Susan, take it.
Yes, Simon, you can start now. The time is now. You don't have to wait any longer. If you are between 40 to 45, you have, assuming you are 40, you have 20 more years to retire. So when you start now, it's better. It's cheaper contributing now than when you are 60. When you are 60, you're already on retirement. Where is your source of income going to come from for you to be investing? So the time is now, Simon.
Okay, great. Thank you for your response. Horan is asking, is SIC FSL a tier 3 fund manager?
Yes, indeed. We are licensed by NPRA to manage pensions tier 2 and 3.
Okay, great. John also wants to know that in the wake of the increase in the minimum capital requirements for fund managers, is SIC FSL likely to meet these requirements, or have they met the requirements?
Yes, we have met that requirement already. We are solid.
Okay, great. All right. Edward is also asking, what is the minimum principal needed for the 14-day treasury bill?
I think for treasury bills, okay, with even 50 Ghana, you can buy a treasury bill.
Okay, all right. If you're okay, so this is for the audience. If you're unable to type out your message, you can also raise your hand. We'll allow a few of you to ask your questions directly, but please try to make your questions related to what we are discussing here. I've seen a couple of questions related to cryptocurrencies. Please, this is about pensions. So please do well to direct your questions, make it related to what we are discussing here. Thank you. And the next question is from Bill. Bill is asking, I'm an entrepreneur. How do I save for retirement?
Okay, so let me take this one. Thank you, Mr. Entrepreneur. It's a good question. In fact, the entrepreneurs and businessmen are so much at risk, and then it doesn't seem to bother them so much. Why? Because they are getting a lot of money from their business. Trading is one good business everybody can do, but always I say that it's not all of us that can trade, but all of us can invest. So for you to start, you actually have to be very intentional about it. Whatever money you get from your business, I don't know how you partition your revenue or your profit, but when you pay yourself, make sure that you are taking about a 10% to a retirement fund. Just like how maybe you are very religious in paying your tithes, you should also be religious in paying 10% to your retirement fund. And of course, this is just a solution I'll give, but we can also have a personal chat, and then we'll get to a deeper answer to that. Thank you.
Thank you to Benjamin. Next question from Emma. Emma is asking, do you have an office in Kumasi, and where can it be located?
Yes, we do. We have an office in Kumasi. We used to be in Dompata, but we moved locations. So we can send you details of the new location.
Okay, great. Okay, I don't know how you do that, but maybe Emma can contact you after the webinar.
Yes,
right.
That
should be fine. All right. This one is from David. How do I contribute towards my Provident Fund?
Well, okay, Susan, take it, please.
I didn't hear the question. I wanted the question again.
Asking, how do I contribute towards my Provident Fund?
So you already have an existing Provident Fund, or you want to know how you can start one?
That's just how the question came. So maybe you can respond to both sides of the question.
So if you already have a Provident Fund, then I assume that your company is an employer-sponsored one. So your company is contributing towards your Provident Fund. But on the side, you could also have a plan B, which is what we are talking about. So we could come over and then we sit you down, have a chat, and then we see how your income is, how your expenditures are, and then if you have, and then make provision for the plan B, because it's key that once you get to a Provident Fund, you have a plan B to support whatever the Provident Fund will be yielding for you.
Okay, great. Let me take a few questions from our YouTube comment section. The first one is from Joel. Joel is asking, what is the cause of the decline in SNIT contributors?
Okay, Joel, it's a good question. For the decline, there might be a lot of factors. There might be a lot of factors, of which I'm not privileged to know some of them. Maybe a trust worker will be able to tell us that. But from where I sit, I think that some workers, should I say intentional, do not want to pay SNIT because they think that it's a lot of burden to them. And then some others also don't know it at all. They don't know that if you are not contributing to your workers' pension, it is something that is going to worry their future. Some also say that they don't have enough basic, the workers don't have enough basic to contribute to some of these things. So these are the few ones I've gotten to hear, but main factors might have to come from the trust.
Okay, great. Susanna, do you want to add anything to that?
I was saying that it's mandatory for every employer to pay SNIT for their workers. So I think the onus lies on SNIT to enforce that rule, to ensure that employers are paying for their employees' SNIT. So that could be one of the factors why the contribution is less. And you know, in Ghana, we have majority of our working force in the informal sector. There's only a small fraction of us who are in the formal sector and are being regulated. So that also accounts to the minimal contributions to the trust.
Okay. Thank you very much, Susanna. The next one is asking, Ifya is asking, how secure are Tier 2 contributions based on the consent shared on the Tier 1 contributions going to SNIT? I think she is referring to the decline in returns.
She said, how secure? The question is, how secure are the Tier 2?
How secure are they? Yeah.
It's very secure. So the Tier 2 investment scheme is regulated by NPRA. And then it has 3 service providers together. It's not just one man. You know, SNIT is acting as a player, and then as a referee as well. So SNIT was the regulator and SNIT was the one managing the scheme. But with the introduction of the 2-tier pension scheme, you have NPRA sitting as an independent body overseeing the work of the fund manager, the trustee, and the custodian. So, and then we have rules and guidelines that each of us would have to follow. And if you flout against any of them, you are sanctioned. So your Tier 2 is very secured as compared to the tier 1 in the past. The Tier 2 is very secured.
Okay, great. This question is coming from Augustine. What is the basic rate of returns from SNIT? It was directed towards Benjamin. Yeah.
Okay. For now, I don't have an accurate data on that. Maybe I'll have to check and then get back. But I'm not sure such an information is published. I'm not sure, but I know that they have a couple of investments in their portfolio, like fixed income, equities. In equities, SNIT has invested about 22 companies on the stock exchange market. So it means that they actually hold the stock exchange market, and they also have huge monies in real estate, hostels, housing projects, and all that. So the portfolio is very huge, but I'm not privileged to have the returns, but I'll check on that.
Okay, so to add to what Benjamin said, we would have to go back to the trust. Such information they don't disclose. Even when you get your SNIT statements, they don't even state the returns that you have made, what is running. It's just the contributions you have received, they have received over the period, and then how much it comes to at the end of the period. So they don't really like disclose some of these things, but I'm sure going forward, some of these things will be transparent because now we have a regulator And then SNIT is supposed to be under NPRA. So going forward, as fund managers have benchmarks, and that is transparent for the players, I think NPRA should enforce that. It also happens with SNIT.
Okay, thank you very much. We still have questions coming in. This one is from Oforiwa. Oforiwa wants to know, can one decide to stop an investment at any point in time? Or do you have to exhaust the proposed time of the investment to stop it? So I think she's asking about withdrawal before maturity.
Oh, okay.
This is with regards to, okay, Benjamin, go on.
Okay, so just a little so that Susan adds up. I think for a personal one, you can decide to make a withdrawal at any point in time. Okay, for a personal one, which is more of a pension plan than any of the tier 1 and tier 2. But when it comes to the tier 3, which is maybe a provident fund, okay, we have the traditional and we have the non-traditional. So with the traditional, maybe after 2 years or 3 years, depending on the company you are doing with or your company is doing with, you can agree on when workers can withdraw from their provident fund. But when it comes to the non-traditional, where it is registered with the NPRA, you have to be invested for 10 years before you can make a withdrawal. So that's what I have to say on that. Maybe Susan will add up.
Yes, and then so to add up on the personal pension plan, you can make a withdrawal, but we always have to be mindful of the goal, the reason why we are investing. So periodic withdrawals always hinder the progress of the investment, and you might not be able to achieve your goal of attaining a certain amount at a certain age. So we also have to be mindful. That's why Benjamin talked about having an emergency fund. So you put some money away for stuff like such things which will stop you from allowing your pensions to grow. We always have to be mindful that the pensions is for the future after retirement. So if you come in and out, you are not going to achieve that which you set forth to do.
Okay, thank you very much for your responses to the questions. And for those of you still asking about the presentation, yes, it will be made available after the webinar. So if you join us late, don't worry. This webinar is also streaming live on our YouTube channel, investingh. So if you're unable to join us here, you can always stream. Even after the webinar, the video will be made available for streaming on our YouTube channel, investingh. Please do well to like and subscribe as you visit our YouTube channel and watch our videos. All right, let's continue. Kweku is asking, can insurance be considered as a retirement investment?
Susan, please, you can take that.
Yes, because now I see a lot of the insurance companies coming up with products geared towards retirement. So I know some have pro wealth, some have financial planning. Yes, so in that light, yes, insurance can also be one of the products geared towards planning for your retirement. If you take the life policy, yes.
Okay, great. Debbie wants to know, if one is in their mid-40s and having privately planned for their retirement, but earns about 1,200 Ghana cedis a month, is it possible for a retirement goal to be achieved for someone in their mid-40s?
Yeah, it's a good question. I think it's very possible. And as we always say, or I've already said, it's very, very important that you know what you want to achieve. With 1,002, at least if you are able to relook at your spending as expenses pattern and all that, I think we can do something. Even contributing about 30 cedis, 40 cedis, it will be a good thing in the future. Yeah, so you can achieve that.
Okay, great. Thank you very much. Edward wants to know, would it be advisable to invest your money in T-bills rather than contributing to SNIT?
Yeah, over the years, it has proven so, because I think when you retire for SNIT, your contributions are multiplied by a factor which no one else knows which factor that is, and then it's giving you. So, but then if you sit back and then you compute investment in treasury bills plus compounding interest over the years, and then you compare to what SNIT is giving you, you see that you are better off investing in treasury bills. This is one of the reasons why the tier 2 and 3 came into being, because what SNIT was giving out to pensioners after 60 years of working, it wasn't worth their while. So in that light, and from studies that have been done, I can say yes, you are better off doing treasury bills sometimes than doing SNIT. But you stand a very good chance if you have SNIT and you have investment in treasury bills as well. And in that case, you have a plan B. Yes.
Okay. Thank you for your response. Ohima wants to know, will the planning for the future constitute the tier 3 as well? Because for those of us working for the government of Ghana, the deductions are made at source. So how do they contribute towards their tier 3? The question.
Okay, so if I understand Ohima, is she trying to say that do you have to include your tier 3 as part of your retirement plan? But anyways, it depends on you. It depends on what you want to do. Some people, in computation of their retirement goal and how much you can contribute to the retirement fund, they do consider tier 2. They do consider any other kind of savings. They do consider a tier 3, maybe a provident fund, before they come and arrive at a figure that will help them to achieve a certain goal target, which means that the contribution will be lesser as compared to somebody who doesn't consider all these things I've mentioned. Okay, so it means that your goal of, let's say, 1 million includes your tier 3, your tier 2, and then any other kind of savings. But for me, I will consider you ignoring or excluding all those things, and then do something that will let you know that, okay, if all said and done, and those tier 2 and tier 3 will not be ready for me at that time, how much can I actually live on? You get it? So it's like you are contributing it in such a way that you have this amount working for you in retirement without the mandatory ones that we know. I don't know if I've answered the question.
Susan, do you want to add anything to that?
I was going to say that, and it's always good to have extra. So you don't, like you say, you don't put all your eggs in one basket. You have tier 1, tier 2, and tier 3. You have a personal plan. So should anything happen, you have something to fall on. If for some reason SNIT is unable to pay you your tier 1 when you come home and your provident fund is delaying, at least you have your plan B that you can fall on. Immediately you come on retirement before these ones are processed for you. So it's always good to plan ahead and have a plan B.
Okay, great. All right. Still getting these kind of questions. If you are listening from outside Ghana, yes, of course, you can invest with SIC Financial Services Limited. Their contact details will be made available after the webinar. If you missed something to this webinar, will be streaming live on our YouTube channel, so you can play back even after we've ended the meeting here. Okay, so the next question is asking, if I have a lump sum of 600,000 towards retirement, would that be enough to earn a retirement benefit of 10,000 per month? This one is asking us to solve some math for him.
Yes, math, yes. So is it just 10,000, 6,000 and nothing comes in again? So
yeah, so the lump sum
everything
is 600,000 and wants to know if they receive 10,000 a month.
10,000 a month. So we'll have to do some calculations.
Yeah.
So maybe you can contact SIC FSL after the webinar, and then they'll help you sort that out. William wants to know, aside SIC, which other avenues offer investment or retirement advice?
So all the licensed investment advisors who are licensed by Securities and Exchange Commission, and then the National Pensions Regulatory Authority. You can walk into any of their offices and then they will help you.
Okay, great. So if you are looking for them, you can find them on the SEC website. There's a section where they've listed the fund managers there, and you can just go through and then contact any of them. All right. Rosemary wants to know, how many years do you have to contribute to SNET before you can receive your pensions?
Okay, thank you for the question. So I think you can contribute at least 15 years to SNET before you can take your pensions. And that is for the 15 year, I think that is considered as a voluntary retirement. Yeah, that's considered as a voluntary retirement. So you have minimum 15 years to contribute and then take your pension.
Okay, great. Emmanuel wants to know, is SIC FSL the same as State Insurance Company SIC?
Okay, so SIC, the state SIC is a mother company. So like I said, sorry, in my presentation, we are owned by SIC Insurance Company and then SIC Life. So SIC Insurance Company owns 70% of SIC Financial Services. And then SIC Life owns 30% of SIC Financial Services. So SIC Financial Services is a subsidiary of these two companies.
Okay, thank you very much for the clarification there. Emma is asking, okay. Another question from a non-resident. Can they also contribute towards their retirement?
Non-resident Ghanaian.
Yeah, non-resident Ghanaians.
Yes.
Okay.
Once we meet the KYC requirements, yes.
Sure. We have a raised hand here. Aduse. Ohima Aduse Pokuye. Ohima, can you hear me?
I can hear you now. So my question was, with respect to the tier 3, someone told me that you can do your deductions pre-tax, especially for us working with the government of Ghana. I mean, those that get paid from controller. I wanted to know if it's possible if it is possible, and if so, if SIC FSL does something like that. So the explanation I got was the deduction is done before tax is calculated according to tier 3 law. So I stand to be corrected. I don't know the true details. So I wanted to ask the experts. Yeah.
So when we're in our presentation, we said that once you have the plan B, you enjoy some tax benefits. So once you are doing a tier 1, 2, and 3, yes, you have some tax benefits. So your findings is true.
Okay, great. Thank you very much for the response. Okay, she's gone. Abigail is asking from YouTube. I think these are our last round of questions before we conclude. Abigail is asking, so what happens if someone has contributed for less than 15 years to SNET?
Yeah, thanks, Abigail. I think there's a way SNET does a calculation. I mean, there's no way you are going to I mean, you are not going to be paid your monthly payout from the tier 1, which is administered by SNIT. There's a calculation that SNIT does, but definitely you are going to get your retirement payout at pension.
Okay, great. Thank you very much. Still getting questions from non-residents. So non-residents, please, you can also contribute towards your retirement. You can reach out to SIC Financial Services Limited, and then they will help you fill some forms, and then you can contribute towards your retirement. We still don't really have any more related questions. Okay, so I think that will be it for now.
John has his hand raised.
Okay, so okay. John, can you hear me?
Yes, please. Good evening.
Good evening.
Please, I want to know if SIC investment is coming to replace the tier 3, or is only meant for personal investments. That is one. And I want to find out that for the personal investment with SIC fund management, is it also pre-tax? I mean, is it tax-free? Thank you. So the question is 2. Do you manage tier 3? If yes, fine. But with a personal investment, if I have tier 3 elsewhere and I want to do personal investment with SIC, is this going to be pre-tax? So it's 2 in 1. Thank you.
Okay, maybe Susan, you should take the first and then I'll take it.
Okay, so we manage pension tier 3. Like I said, we are licensed by NPRA to manage pensions tier 2 and 3. And then you want to take the second one?
Yeah. So with the second one, if you are already contributing to the tier 3 and you have, I mean, you want to do a personal one, that one is not pre-tax. Okay, it's not pre-tax in the sense that by that time you would have, your deductions would have gone already, and then you are left with your net salary, which falls in your account, and that is where you are going to pick the money from. Okay, that with that you don't have the tax, benefit. But if it is going to come from it's going to come into a tier 3, which is maybe a provident fund, then that is where you have the tax benefit.
And again, when you bring the funds to us, your plan B for us to invest, it's not going to attract any tax. I think that's what he means.
Yeah.
Yes. You're not paying any tax for having a plan B.
Yes.
Okay, I think we'll take the last question from Collins. Collins is asking, if you are in your late 20s, can you start investing for retirement at SIC FSL, even though you don't have a permanent job, but you still want to invest? Is that possible?
Absolutely.
It's a very good idea. Yes, you can.
Great. All right, I think that should be all the questions that time will permit us. And also for our viewers, thank you very much for joining us today. Before we leave, we just have a few announcements to make. Okay, so this webinar is brought to you by investingh. investingh is the leading provider of financial news and education in Ghana. Over the years, our news, magazines, and more recently, our webinars have been delivered to thousands of people in Ghana and beyond. If you haven't joined the investingh team, please visit our website on www.investingh.info, www.investingh.info. Fill a short form with your name and then an email address we can reach you on, and then register with us so that whenever we have a webinar or whenever we have some information to publish, you will receive them. Also do well to join our WhatsApp groups, which are made available on our websites and also in the chat section here. Click on the link and then join our WhatsApp groups. We send out financial news and magazines and newspapers so that you can read. We also send out links to our various webinars as well. All resources to our various webinars, our previous webinars are available on our website and our YouTube channel, investingh. You can stream them on our YouTube channel, investingh. Please do well to like and subscribe to our channel, like our videos as well, and share them with your friends and family. Also, if you'd like to reach out to our speakers, their contact details will be made available after the webinar. When we post it, we'll also, when we post it on YouTube, we'll make it available to all of you so that you get to contact them. The presentation will also be made available after the webinar, but only to our subscribers and those in our WhatsApp group. So if you haven't joined, please do well to join. If you have any more questions that were not answered here, or you were unable to ask your questions, you can reach out to our speakers and they will respond to your questions. Okay. Also, one of our speakers, Benjamin, is the author of, he's an author, okay, and he has a couple of books that he wants us to read and also get educated on finances. Some of his books are The Finance Challenge 1, The Finance Challenge 2, which are published annually in a series. Other books are 7 Lessons on Financial Freedom and How to Invest 10 to 20% of Your Income. You can visit his website to learn more about his works. His website is www.moneyread.wordpress.com. The link to the website has been made available on the chat section here. So you can just click on it and then visit his website, get to read more about his books. You can also contact him if you want to know more about his books and about finances. Okay, Benjamin and Susanna, do you have anything to tell us before we leave? Any final words? Benjamin, you've muted yourself, so we can't hear you.
Okay, sorry about that. Thank you very much for hosting us, and we are grateful for this opportunity. And want to also express our profound gratitude to all those who made time to listen to what we have. What I'll say is that time and tide waits for no man. If you want to plan your retirement, you need to start now, and we are ready to help you. So do well to contact us any moment from now. Thank you.
Okay, great. All right, so that means you'd have to make your contact details available to us right after the webinar and also the presentation so that they can start contacting you now. I know most of you want to go and watch the Champions League final, so we wouldn't waste much of your time. But thank you for spending this hour and 30 minutes with us, and we are grateful for always patronizing our work and for joining us to educate ourselves on investments. We hope to see you next time we have a webinar, and please stay in touch with us. We'll be posting newspapers and magazines for the week very soon in our WhatsApp groups, so stay tuned. We'll see you next time. Bye-bye and enjoy your evening.